Hello, my name is Jamie Douglas, and alongside Gareth Powell, we co-manage the Polar Capital Global Healthcare Trust. On behalf of the board and Polar Capital, we would like to thank you for your time and interest in Polar Capital's Global Healthcare Trust. It is very much appreciated. So moving to slide 2, we firmly believe that compelling investment opportunities lie ahead in the healthcare sector, based on a robust long-term growth outlook, the potential for positive earnings revisions and accelerating structural changes. Importantly, the COVID-19 pandemic has been a catalyst for positive change that we believe will yield dynamic growth opportunities. Furthermore, it is our belief that the healthcare sector is under-owned, underappreciated and attractively valued. Finally, the trust is managed by an experienced team of specialists, is high conviction and is currently trading at material discount to NAV. Slide 3 is my favourite slide in the presentation, highlighting the strength and depth of the healthcare team here at Polar Capital, a team that continues to evolve. Clearly, there are no guarantees in life, but we do hope that the experience we have could generate ideas, extract the most out of our interactions with management teams and experts, and also help us to assess risk. So now we need to review 2021, the financial year. So slide 5 is backward looking, so apologies, but as you can see, the Trust's NAV return in sterling outperformed the index by just over 6% for the financial year. We will share further observations later in the presentation, but in essence, the environment was supportive for high-quality, large-cap healthcare companies. And that's an environment that suits the strategy we have for the Trust here at Polar Capital. Slide 6 touches on the key investment themes that we focused on in 2021. The disruption of healthcare delivery, i.e. caring for patients in lower-cost settings, outsourcing of non-core activities and prevention, are all themes that we believe accelerated through the COVID-19 crisis. To be clear, innovation, consolidation and emerging markets are also important drivers for the industry. They have just been less pronounced in recent months. And critically, these 6 themes remain relevant and will be discussed in greater detail later in the presentation. Slide 7 looks in greater detail as the key drivers behind 2021's performance. We were fortunate in that both allocation and stock selection were positive performance drivers in 2021, with our overweight stances in life sciences, tools and services and healthcare equipment key. For life sciences, tools and services, key drivers included COVID-19 testing, vaccine production and recovering end markets, whereas for the healthcare equipment subsector, returning patient volumes were key. Disappointingly, we struggled with healthcare services and facilities, with stock selection the primary investment challenge and staffing pressures the primary industry challenge. Overall, however, we were satisfied with 2021's performance. Slide 8 gives you a sense of how the Trust's positioning changed during the financial year. We've tried to highlight the biggest shifts, but in essence, we moved away from COVID-19 beneficiaries such as life sciences, tools and services, and more towards subsectors that could potentially benefit if COVID-19 moves into a more endemic phase and consumers really start to re-engage with the healthcare system. In that regard, we've highlighted facilities and the managed care organisations. And finally, for the backward-looking section of this presentation, we've included a slide that displays the market cap, subsector and geographic breakdown of the portfolio as at the end of December 2021. Thank you for your attention. I will now hand over to Gareth, who will share with you our ongoing enthusiasm for healthcare as an investment opportunity.
Thank you, Jamie. So we now see valuation across healthcare as looking very attractive, with large cap healthcare, for example, sitting at greater than a 20% discount to the broader market, which we think is too cheap for the sector. Smaller mid-cap stocks look very attractive. Obviously, they've pulled back quite significantly recently and now trade at much more interesting levels. Amongst the smaller mid-cap stocks, those of the more speculative type we've avoided for the last 12 months due to valuation concerns. The corrections here have been the most aggressive, and valuations even here are starting to look more interesting. Jamie mentioned earlier the main long-term investment themes for healthcare in the presentation. As we hopefully move forward from COVID-19, there are 3 particular themes that are critical now in hopefully a post-pandemic world, stimulated or caused by the experience with COVID-19. 2 of these highlighted earlier are also long-term themes: delivery disruption and prevention. The former deals with the shift away from the most expensive setting for delivering healthcare, the inpatient hospital, to alternatives such as the outpatient setting, ambulatory surgery centres and home healthcare. It is estimated that 25% of care could be delivered in the home in the US, from low single-digit percentage today. The latter is focused on COVID-19 driving a resurgence of preventative care. The pandemic has highlighted the value of diagnostics and vaccines, and we expect significant research and development spend in these areas going forward. An additional third theme is tackling the backlog. There has been an unprecedented build-up in the backlog of care. We expect significant efforts to deal with the waiting list for elective procedures, to bring about a return to pre-COVID-19 levels of cancer testing and treatments, and also to bolster mental health treatment, the demand on which has increased dramatically due to the pandemic. The next 3 slides focus on examples of holdings that fit with the themes that we've just mentioned in the previous slide. So firstly, dealing with delivery disruption. Amedisys, Encompass and Surgery Partners are all good examples of businesses that are helping to drive the shift in patient volumes away from the inpatient hospital setting. Amedisys focuses on home health care, and Encompass specialises in rehab and home health care and hospice. Surgery Partners is a leading US-based ambulatory surgical centre operator which offers surgeries outside of the inpatient hospital setting. So think of a future with hip and knee replacements carried out on virtually an outpatient basis. The next theme is prevention, and the 3 companies highlighted as examples are Abbott Laboratories, Hologic and Quotient. Abbott is a diversified medical equipment company with exposure to attractive end markets such as diagnostics, diabetes, nutrition and cardiovascular. Hologic has 2 primary businesses, diagnostics and women's health. Importantly, the management team is investing the COVID-19 generated revenues from their diagnostic tests into faster growing complementary businesses. Quotient has developed an automated system for testing bloods ahead of transfusions, allowing use of a much smaller sample size to be tested, which can be done more rapidly, cost effectively and with reduced manual labour. And lastly, tackling the backlog. The 3 companies here as examples are Axonics, Zimmer Biomet and Boston Scientific. Axonics is focused in the field of bladder and bowel dysfunction. Zimmer Biomet is a leading protagonist in the fields of hip and knee replacements. And Boston Scientific has broad exposure to utilisation as a leading medical device manufacturer and is a beneficiary potentially of backlog starting to be dealt with when hopefully COVID-19 infections drop to much lower levels driven by higher vaccination rates. To finish, we are excited about the potential for healthcare in 2022. The reasons are attractive valuation across different market caps, the potential for positive earnings revisions, particularly if we see utilisation increase through the year, and a macroeconomic backdrop that is potentially turning more supportive for the healthcare sector, particularly high quality large cap stocks. The Polar Capital Global Healthcare Trust is structured in such a way as to benefit on all the positive drivers that have been mentioned throughout the presentation. Polar has increased its investment in healthcare by expanding its team and allowing us to continue our independent research, which supports the active investment strategy applied to the investment trust. Thank you for listening.